In a previous video, we discussed about some of the benefits of keeping your money in a dollar account. And at that time in 2023, the Kenya shilling had witnessed a lot of fluctuation against the dollar. So many people are opting to keep their money in dollars, even if the money was not being utilized. However, in 2024, the shilling has stabilized against the dollar. Now, if in January this year you had 160,000 and you opted to store them in the form of dollars, you would have gotten about $1,000. Now, if today you are selling them, when the dollar has fallen to about 125, you will get 125,000, meaning if the money was not utilized, you will be making a loss of close to 40,000. In this video, we are going to talk about some of the ways that you can keep your money in dollars, but also keep the money invested. These are investment options that do not need your money to lie idle for it to be stored in dollars, because the dollar still has certain benefits, but then it's more beneficial to you if the money is not lying stagnant in a dollar current account, but then it's invested. Number one is the USD fixed bank accounts, and these are available with most commercial banks in Kenya. Here you will be required to lock your money over a certain period of time, and your money will be attracting interest, typically between 1 and 4% per annum. Number two is dollar MMFs, and most MMF fund managers in Kenya have a dollar option. So this money will be stored in the form of dollars, and it will still be earning interest, typically between 4 to 8%, depending on the rates that are prevailing at the moment. But this ensures that your money is not only easily accessible more than the fixed account, because you can access your money within a few days, and the money still grows because there is interest being paid on it, and it can even be compound interest if you reinvest the interest paid out to you. Number three is offshore investments. Here is where you buy stocks or shares in international companies, for example in the New York Stock Exchange or in the JSE or other international markets, and you buy shares either because you want them to grow in value and you can resell them, or two, you want to be earning dividends, because the same way the Kenyan companies pay interest in the NSE, these other global markets also have the same benefits. And of course, buying stocks in the international market will require you to be a bit liquid, because the stocks can be quite expensive. Number four is digital assets. Because of blockchain technology, you can buy certain assets that are digital. For example, there are cryptocurrencies. These are coins that can be traded online and they grow in value over time. There are also stable coins. There are NFTs, and these ones you buy because over time the value increases. For example, the Bitcoin account, some people bought them when it was very low, and now it has grown, and for each unit you hold, you'll be making a lot of money as it appreciates over time. And of course, you will need to have some knowledge of how these currencies work so that you do not lose your money. There is also a high risk of the currency going down and you will be losing money. Number five is EFTs, or exchange traded funds. So EFTs basically allow you to buy smaller units of either international stocks or even the digital assets. If you are to buy a stock like Apple, one unit is going for close to 25,000. So if you don't have the money, it can be very difficult. So the EFTs allow you to buy a unit that has a smaller unit of it. So maybe whatever one EFT can have a certain percentage going to a unit of an Apple stock. You have also a crypto there, because cryptos are also quite expensive. They are going for millions of shillings. So you buy a small percentage representative of your share, so you can engage in this investment even if you do not have millions in capital that will be needed if you are to go it alone. Money254.co.ke has written more about some of the dollar investment options that are available to Kenyans. Click on the link provided to learn more.